One stock, ladies and gentlemen, can change your financial life forever. And I have some stocks that can change your life. What you're looking at in front of you right there, that is the house I was renting when I was around 28, 29 years old. And in that particular house, that's the house I started buying a stock named Tesla. And I started buying Tesla stock. It was a very hated stock back in those days. And then Tesla went through an absolute unbelievable bull cycle, and I was able to, let's just call it, upgrade my dwelling. This is the vehicle I owned before buying Tesla stock. It was an Alfa Romeo Stelvio. It was actually a good SUV. I like that SUV. Like, hey, I got nothing but good things to say about the Alfa Romeo, but I was able to upgrade a little bit after Tesla stock, right? Ferrari, Model S Plaid, Tesla Model X, slight upgrades there. Before Tesla stock, I had crap health insurance. We had a tight budget for food. I always would tell my wife, hey, don't be getting that filet mignon. Get that strip steak, okay? That's all we can afford. Tight budget on vacations, all that stuff, right? And before you find some game-changing stocks, that's kind of what it is, right? And I had a lot of success before Tesla stock, and that allowed me to at least have health insurance and at least rent a decent house and drive a decent car and have a budget for food and have some sort of budget for vacations, but it was like over the top, right? And then Tesla stock came along and certainly changed my financial life forever, right? And then we just took it from there and from there and from there. So in today's video, we're going to talk about a specific stock that's changing people's lives right now. And I mean literally right now. There's people making tens of thousands, hundreds of thousands, and millions of dollars on the stock literally today, okay? We're talking about what's going on with this stock, why it's going on, how much more upsides left in this one, and additionally, since this is a stock I also personally own, will I sell my shares? This stock has skyrocketed like insane. Am I going to cash my shares? We're going to go through all that in this video and how much upsides left in regards to the stock, okay? Second subject we're going to speak about here today is I did spend 5 figures plus on a stock here today. I'm going to share what that stock is and why I went ahead and did that here today. The third thing is I'm going to share with you guys a way to play the AI chip demand outside of nvidia, AMD, ARM, those sorts of stocks, right? The ones you usually think about, okay? And this one's a pretty interesting one. So I just want to share that with you guys here today in case it's something you're interested in and you want to do a little bit more research. Just one thing and one thing only I ask from you guys. I hope you appreciate me doing these videos for you guys. I appreciate you joining me. All I ask in return is that you smash that thumbs up button. I hope that's not too much to ask, okay? I hope that's not too much to ask. That's all I ask, okay? If you want to subscribe to the channel, you can certainly subscribe. It's free to do so. Additionally, if you want access to my entire library of premium courses, like Become a Master of Stock Market, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, access to my private Discord chat, access to 1000xstocks.com, the research platform, all that good stuff. Pin comment down there, click on that, fill out a form. We'll see if we can get you access to that later on this week, okay? Alrighty, let's get rolling here. So, did you watch this video that I put out 2 months ago? There's a video I put out 2 months ago called 3 High Potential Stocks. And in this video, I talked about 3 stocks that I thought have the ability to change folks' lives, right? And that video was 2 months ago. Well, the 3 stocks I covered in that video, this is one of those 3 stocks. It's a company named Honest Company, HNST. At that particular time, that was a $3.40 stock. Now that stock is, we can call it a little less than a double up, but almost a double up from that price. It's now $6.63 a share. The second stock I covered in that video was a company named SoFi Technologies. SoFi Technologies was an $8.59 stock. I said Thomas the Train that could. And did Thomas the Train really go? Because SoFi here today is over $15 a share. And the third stock I covered in that video was this company, Fubo TV. It was a $1.41 stock. And I said in that video, don't let this fool you. A lot of people were getting fooled by the 1-year performance. They were getting, frustrated with the stock. It wasn't going anywhere. And I was telling folks, everything's headed in the right direction with this company. All the numbers are headed in the right direction. Everything's headed in the right direction, right? That stock here today is now nearly $5 a share, up over 200% here today. In that video, I specifically talked about there's a high probability that there's going to be a settlement way before this goes to trial. I've been fortunate as my net worth has grown over the years. I've gotten to know some very, let's call it top 1% lawyers. I'm certainly no lawyer, but I know some very special, very talented lawyers, okay? And they taught me a lot over the years. And so I can analyze some of these situations and kind of realize what's likely probable in a legal outcome. And so in this particular situation, I looked at it and I said, I think there's going to be a major settlement based upon how favorable everything was going for Fubo. I thought there's a high probability that there's a settlement before this ever goes to trial, because the way I looked at it, and you can go watch the videos that I've talked about Fubo over the past few months, I told you guys specifically, like Disney, Fox, Warner Brothers, these guys aren't going to want to take this to trial. It's going to get ugly and it could be way more painful for them. And so I said there's probably likely a settlement coming out before that. The specifics of that, we'll see, right? And we'll go through what just happened, and it's game-changing for the stock. And speaking about game-changing, look at this. Options, you want to talk about options printing? You understand when a stock moves 200+% in terms of stock price in a day, you're going to see options, call options on that stock, move thousands and tens of thousands of percent the very next day. And that's exactly what we have seen here. 32,000% gain, 26,000% gain, 31,000%, 27,000%, 22,000%, 17,000% gain today, okay? 16,000%, 13,000%, 20,000%. Jan 31's here. 10,000%, 11,000%, 12,000% gains. This is incredible, right? I took it all the way out to May. Even May calls were just insane today. 2,200% up, 3,000% up, 3,000%. You got to understand, when a stock moves several 100% in a day, the options are going to be thousands and tens of thousands of percent, and that's exactly what we've seen with Fubo. My private stock group today was insane. And the amount of people that made thousands, tens of thousands, or even hundreds of thousands of dollars today was ridiculous. I mean, absolutely ridiculous. A lot of folks, looked into Fubo and they liked it as just, kind of a speculative stock, and they built out some sort of position, and those folks were rewarded handsomely today. It was ridiculous. I mean, some of these gains were just insane. This is a $180,000 gain today. $180,000 gain today for this individual. Imagine making $180,000 in one day. Like, absolutely incredible, right? Jeez. It's insane. I mean, just insane. Like, it's great to see, that sort of situation play out there, right? Now, what happened with Fubo? Like, why did this stock go absolutely insane? Well, here's what happened, okay? Fubo and Disney's Hulu plus live TV virtual MVPD business to combine. Disney to combine its Hulu plus live TV business with Fubo and become a majority owner of the resulting company. The combined business will operate under the Fubo publicly traded ticker symbol Fubo, right? Led by the existing Fubo management team. Fubo and Hulu plus live TV will continue to be available to consumers as separate offerings. Shout out Shaheen, shout out you, man. With a combined 6.2 million North American subscribers between Fubo and Hulu plus live TV, the new virtual MVPD company is expected to enhance consumer choice through more flexible programming offerings. Fubo to create a new sports and broadcasting service featuring Disney's premier sports and broadcast networks. This is huge. This is what Fubo took them to court over and blocked the venue, right? And now Fubo is essentially, going to do this. Like, wow. All litigation between Fubo and Disney has been settled. I told you guys, man. Davey Gandler and the legal team at Fubo, like, they did a heck of a job, man. They did a heck of a job. Like, they played it well. And the Walt Disney Company today announced they have entered into a definitive agreement for Disney to combine its service with Fubo. The transaction will enhance consumer choice by making available a broad set of programming offerings and is subject to regulatory approvals. Fubo's shareholder approval and the satisfaction of other customary closing conditions. Now, keep in mind, obviously Trump takes office here in just a couple weeks from now, and so it's pretty probable that let's just call it the environment for doing these sorts of deals is going to get very much more friendly over the next year or two. So there's a pretty good probability that this will end up being able to go through. It's not guaranteed, but I'd say it's pretty good chance. Okay. Under the terms of the definitive agreement at closing, Disney will own approximately 70% of Fubo. Fubo's existing management team, led by Fubo co-founder and CEO David Gandler, will operate the newly combined Fubo and Hulu Plus Live TV. We are thrilled to collaborate with Disney to create a consumer-first streaming company that combines the strengths of Fubo and Hulu Plus Live TV brands, said Gandler. This combination enables us to deliver our promise to provide consumers with greater choice and flexibility. Additionally, this agreement allows us to scale effectively, strengthens Fubo's balance sheet, and positions us for positive cash flow. It's a win-win for consumers, our shareholders, and the streaming industry. Yeah, we're going to go through the specifics of this deal. Oh my gosh, is it looking good for Fubo, okay? The combination will allow both Hulu plus Live TV and Fubo to enhance and expand their virtual MVPD offerings and provide consumers with even more choice and flexibility, said the executive vice president and head of corporate development at Walt Disney Company. We have confidence in the Fubo management team and their ability to grow the business, delivering high-quality offerings that serve consumers or subscribers while the content they want with offering great value. Now, obviously, these products are allowed all over the place. If you don't know Disney, they own ESPN. ESPN owns ABC, ESPN, all the different ESPN networks. And at the end of the day, if you want to watch sports, it's very difficult to watch the type of sports you want to watch without going through ESPN-related products. It's very, very simple when it comes to that, right? Now, following the closing of the transaction, Fubo will be governed by a board of directors with the majority appointed by Disney, as well as independent directors. So this is a give and take situation. David Gandler got a lot of his way. David Gandler won this battle 90%. But this is a one angle I'll say he didn't win. Maybe the 10% that Disney won here, right? Maybe one of the main key points that they wanted to win was Disney's going to control the board of directors, which means David Gandler could play himself long term here. How does David Gandler play himself? Well, if David Gandler does a bad job, Disney board of directors is going to likely throw him off and bring in a Disney person. I'll put it to you as simple as that. So if the results aren't good enough over the next couple of years, if Fubo's stock price, let's say, next few years doesn't do very well, they're going to kick David Gandler out. I would say high probability of that. Now, if David Gandler tears it up and Fubo's doing great numbers, then there's really no reason for the board of directors to get rid of him, and he'll be fine. But if they go through any sort of tough time, it's going to be probably quick action to get Gandler out of there and bring in a Disney person, okay? Gandler will, and also sets it up for a situation that, it could set up a situation where Disney ends up buying out this whole entity long term, like they did with Hulu in the past. Because back in the day, they made a big position in Hulu, and then they ended up buying the whole thing. This could happen with this a few years from now. Maybe not anytime in the short term, like in the next 1 to 2 years, but 3 years out, 5 years out, 7 years out. I wouldn't be surprised if at that point in time, maybe Disney just buys out the whole company. Maybe at the same time they kick Gandler out, right? So I'm just playing years out here, kind of a game of chess, okay? Gandler will also serve on the board of directors, continuing as Fubo's CEO. The transaction will provide the combined company with the resources and support of Disney, and existing Fubo management team will continue to focus on driving growth and profitability. The transaction will also enable Fubo shareholders to benefit from synergies of the combination. The combined business will realize synergies through more flexible programming packaging to cater to all audiences, greater innovation, and sales and marketing opportunities. The combined company is projected to be well capitalized and cash flow positive immediately after closing of the transaction. That is such a key sentence there. Such a key sentence. Cash flow positive immediately after the closing of the transaction. In conjunction with the transaction, Fubo has settled all litigation with Disney and ESPN related to Venue Sports, the previously announced sports streaming platform planned by ESPN, Fox, Warner Brothers. Fubo has settled all litigation. Look at this. Fubo has also settled all litigation with Fox and Warner Brothers. They settled. Oh, who could have thought a settlement was coming, I wonder. In connection therewith, at signing of the transaction, Disney, Fox, and Warner Brothers Discovery will make an aggregate cash payment to Fubo of $220 million. I try to tell people 1,000 times in regards to this Fubo situation, there was only upside for Fubo. There was no downside scenario in regards to Fubo doing what they did. I think people are seeing it now, right? $220 million cash payment. Oh my gosh. In addition, Disney has committed to provide a $145 million term loan to Fubo in 2026 as part of the transaction. Additionally, a termination fee of $130 million will be payable to Fubo under certain circumstances, including if the transaction fails to close due to the failure to obtain requisite regulatory approvals on the terms and conditions set forth by the definitive agreement. So if the deal somehow doesn't go through, right, which, I think if I had to put odds on, I would say like 85% chance deal goes through, 15% doesn't, okay? But let's say the 15% chance plays out, right? Well, Fubo is going to get a $130 million payout still, even if the deal didn't go through. That's not a small amount of money. Advisors, Wells Fargo was helping advise Fubo as well as Evercore in regards to that, right? Now, this really sets up Fubo to take on YouTube TV. I would say, like, with how many subscribers YouTube TV has, which, could be approaching 10 million, somewhere around there roughly, right? Paid subscribers. It's a situation where I always told you guys, like, Fubo has a chance to be the number 2, but then they have no chance to be like a number 1 in this marketplace. Well, now that they combine with Hulu plus live TV, there's a potential that they could overtake YouTube TV long term. There's certainly no guarantee, and it's going to be a heck of a challenge, but they actually have a decent chance of this. And this is something, like I said, like, in the past, you thought there's no way they have a chance to pull this off, right? Now, maybe they got a little bit of a chance here. So let's break this down, okay? Fubo's now going to be set up where they can likely hit 10 million plus paying subscribers likely in 2 to 3 years from now, right? If you kind of look at where their numbers are at right now, they're going to likely launch a new service probably in the next year that's, I would say, probably going to be a very hit service that will probably be a cheaper price point, but just be heavy sports and not come with all the news channels and stuff like that, like a lot of people don't like, right, and don't really care about. So I think it's pretty realistic for them to potentially hit 10 million plus subscribers in the next 2 to 3 years, right? They're talking about they're already going to be cash flow positive immediately, never mind how this cash flow builds out over the next few years. They're going to have cash coming out of their ears because of the whole $220 million payment and all that, right? And they already had a pretty good cash balance as it was, right? Plus, Disney is going to provide them with a loan in case they needed to tap that, $145 million there. Holy smokes, this is no dang jokers. So they got cash coming out of their ears. Now, additionally, they're going to have, obviously, an insanely super close connection with Disney and the incredible amount of content that Disney owns, right? And this is going to be an entity that's majority Disney owned, right? Because, obviously, Fubo owns 30% of it, and then Disney's going to own 70%. So it's very in Disney's favor for this to be successful over time, right? And so the question is, how do you value a company like this? And so I'll say this. My opinion is the total entity, right, should likely end up being valued, I would say, somewhere between $5 billion at the low end, $5 billion, and potentially all the way up to $25 billion on the high end, okay, with this sort of entity we're now looking at here. So that's significantly higher than where we're at right now. The market cap, even after today's blast off to the moon, is under $2 billion market cap on this one. And I believe the minimum kind of barrier that we should be thinking about valuation of this entity is around $5 billion, okay? So, there's certainly a lot of room here, and I think we could go all the way up to potentially $25 billion. But this is going to be very hard to value in the short term, which is going to make the stock very volatile. But the moral of the story is, like, Fubo's valuation has a lot of room for the upside over the next 12 months, like a lot of room for upside, right? Which then takes me to this, and what am I planning on doing with my Fubo stock, okay? So here's the deal, okay? Fubo just became my eighth stock in the public count of my current positions that is now up over 100%. It joined Tesla, Elf, Palantir, Meta, Revolve, SoFi, and Amazon to become the eighth stock with 100% plus gain, right? Absolutely extraordinary. It's done well for us. So am I planning on selling some of my shares? Here's my thoughts on that, okay? So if and when the stock goes to $10 plus, I'm planning on selling about 25% of my position. If and when the stock goes to $15 plus, sell another 25% of my position. If and when the stock goes to 20 plus, sell another 25% of my position, and then hold the last 25% of my position for the long term. And that would allow me a situation where I could take some pretty insane profits along the way as the stock goes up over the next, hopefully 12 months here. And then also allows me a situation to, still hold a decent position for the long term, right? But yeah, it's going to be hard for me to not sell some shares as it goes to double-digit pricing, right? Because it just allows me to de-risk in that situation. So that's what I'm looking at in regards to Fubo. Now, very important I say this, right? And I always tell you guys this on the channel, and if you've been watching my content for a long time, I always tell you when it comes to these speculative stocks, like a Fubo, right? A little bit goes a long way. You don't need to risk the farm in these stocks. When you find a good, spec opportunity, like, dang, man, this company's revenues are trending up, like, this is going right, it's kind of a speculative stock, it's in the gulag, it's under $5, right? A little bit goes a long way. Because if these ones come through, right, if it's really that big of an opportunity, the stock could 5x, 10x, 20x, 50x over time, right? So you don't need to risk that much money to make a ridiculous sum of money. On the flip side, when these ones don't work out and it goes wrong, right, and it's like, dang, like that didn't work out, it's good that you risk a small amount of money because you lose then a small amount of money, right? You're not risking the farm. You risk the big money on the great companies that are solid, profitable companies that just have incredible moats around their business and just pour in the cash, and it's just more and more and more every 5-10 years, right? That's where you put your big money. Small money, you can risk it sometimes in some of these spec plays. If it really has, but the thing is, like, not everybody knows how to identify a good speculative stock, I'll be honest. Like, a lot of people throw stocks at me, and a lot of them aren't very good, right? They're like pre-revenue or like very minuscule revenue and those sorts of things, and those are just extremely risky. You looked at Fubo. Fubo has an actual, like, real business model. Like, they have, I'm a paying subscriber of Fubo. Like, they have a lot of people that are subscribed to Fubo, right? And use that to watch all their football games and whatever other sports they watch, right? Or watch CNBC and all the other channels. They have like an actual business model, and their losses have been coming down, right? They got a real management team here. Like, they got a real business model. But they were going through some tough financial times, and then the whole venue situation added fear, right? That added a lot of fear to the whole situation. And so that's all over now. And so now, as long as this transaction clears, like, double digits is coming for the stock in a very short amount of time here, right? But a little bit goes a long way. Where people run into troubles when they risk the farm in these sorts of stocks, right? No. Okay, so I invested 5 figures plus into a stock here today, right? And if you watch, there's 4 videos I've done really in the past 2 weeks on the channel, right? Because I was taking off some time for New Year's and all that stuff, right? But I did this video, I sold it all while on vacation last week. I did this video, 7 stocks to buy now, January edition. I did this video, I spent $27,000 in these 6 stocks, and I did this video called Nike Stock is Easy Money. And so, Nike stock. I bought Nike stock pretty heavily today. I bought 300 shares of Nike stock, paid $72 and some change for those. And if you look at what I'm buying very, very heavily here very recently, like, especially this past month, it's AMD and Nike, man. I'm adding those stocks extremely aggressively right now. Yeah, I don't think I have all the time in the world to add to these positions at these sorts of prices. And so you're just going to continue to see me add to those type of stocks very heavily here in the short term. And that's exactly what I'm doing in regards to Nike. And I think this is going to be, I'm willing to risk big money in Nike because I think there's a very high probability I'm going to 2x or more my money in Nike over the next 3 years. And I think there's an extremely low probability I lose 50% or more of my money over the next 3 years. And so when those two come together, I've got to risk some big money. And so I'm putting big money in Nike right now, putting big money in AMD, and you're seeing that, right? Now, also keep in mind, my Patreon's always linked in the description. So if you ever, if you're somebody that really enjoys my content, you want to support my content, plus get access to see the stocks I'm buying and selling every single week in my Patreon portfolio, that's always linked in the description area down there. So if you guys are ever interested in joining, you can join that. This is different than my private stock group, so do keep that in mind. My private stock group's a whole different tier and whatnot, right? It's a whole different dealio. But yeah, and then we also have a pay annual option if you're looking to save some money, okay? Alrighty, so third thing here is, what's a way to play AI chip demand outside of buying NVIDIA stock, AMD, ARM? And so obviously you guys know I'm buying AMD very heavily right now. I think this is a great opportunity, and especially in the 120s for AMD, right? I did this video 3 weeks ago called Buy AMD Stock and Don't Stop Buying. Buy every share you can. So obviously I'm very biased in terms of I believe this is an extraordinary opportunity to buy AMD stock, right? And the reason being is AMD is not trading at crazy valuations, and we haven't even really begun to see the big AI volumes for AMD, that's really going to play out over the next 3-5 years. And so given that, in my opinion, very cheap forward PE and 2-year forward PE, with this type of growth AMD has coming over this next 3 to 5 years, I think it's a pretty extraordinary opportunity, right? But I understand not everybody's looking to buy an AMD or an nvidia or these sorts of stocks. And the fear is, what if one player makes it impossible for the other player, right? Like, let's say NVIDIA makes it impossible for AMD to really compete in the AI chip market, and NVIDIA just completely dominates it over the next 5-10 years, and AMD just can't do a thing there, right? And so it's a fear. So people say, I don't really want to own that. But then people might look at NVIDIA and they're like, NVIDIA has this, close to $4 trillion valuation on it. They may look at that and they say AMD might come in and start eating market share big time from NVIDIA and cause margin compression for NVIDIA and revenue compression and growth rates and things like that. And it could be ugly. So they're like worried about that. Then there's worry about custom chips, right? In Amazon, Meta, all these big companies, Google, right? All doing custom chips. So this fear from like, well, what if that's going to hurt NVIDIA or AMD? Now, a lot of these fears are ridiculous fears. There's plenty to go around for everybody, but I'm just running you through like how some people think in regards to these stocks. They're like, I don't feel comfortable just owning NVIDIA. I don't feel comfortable just owning AMD. I don't feel just comfortable owning somebody like an ARM or Broadcom, right? Otherwise known as Avago. Like, that's the way some people might think about this, right? Now, you could also just own them all. You could buy all the stocks. That's certainly a way you can play it, but there's another way you can play it, okay? So you got to understand, whenever you're talking about electronics, whenever you're talking about chips, all this stuff needs memory. It all needs memory, right? And there's only a few major players in the world when it comes to memory. And one of those companies is a public company named Micron, ticker symbol MU on this one. This company I'm very familiar with. It always trades at very low PE ratios. Forward PE on this stock is 9, 2-year forward PE is 8. The growth rates are extraordinary from this company. And at the end of the day, if you believe massive amounts of AI-related chips are going to be sold, and if you believe the complexity of chips and chip architecture is going to get much more complex over the next 5, 10, 15, 20 years, then that allows a pretty good opportunity for a company like MU. When you think about the memory-related needs for electronics, for chips, for computers, for phones, for everything, 10 years ago, it was a lot less than today, right? 20 years ago, oh my gosh, like go back 30 years ago and look at how much memory a computer had back in those days. You'll laugh. You'll literally laugh if you look at computers 30 years ago and you think about how little memory they had versus what's in your pocket today or what device you're watching this video on right now. It's like a night and day difference. It's like, wow. So memory is always needed. It's always a need in the marketplace, and a company like MU is there. So if you want to bet on more chip demand over the coming years, then you could bet on somebody like a Micron to obviously make their fair share of money. And the memory chip space is very difficult. You can't just like upstart a company and think you're going to compete in these sorts of products. It doesn't work like that. Like, these memory chips are extremely complex nowadays. They take incredible amounts of R&D. The facilities in which they actually make the memory are extremely complex and extremely costly. So there's only a few companies in the whole world that are really big players in this market, and MU is one of them. So you could play that if you want to play this demand. But the one thing I'll say here is MU is very similar to how people used to look at investing in oil and gas stocks. Chevron, ExxonMobil, they're commodities, right? But they own a dominant market share in this business. And the other thing I'll say is I think it's even tougher to compete with an MU than it was to compete against ExxonMobil and Chevron, right? All are difficult, but I mean, to compete with MU, you're going to need hundreds of millions or billions of dollars. To compete with an oil and gas company, I mean, you can get started for a little cheaper than that. But so that's just a little food for thought in regards to that. It's probably never going to command some big PE ratio. Forward PE on the stock's probably always going to be in that, 7 to 20 range. And that's just what you have to expect. There are certain time periods when you can buy MU, and it's a great deal, and that's usually when you're going through a very down cycle for chip demand. That's usually some pretty extraordinary opportunity. Now, the last thing I want to leave you guys on here today is walking the tightrope, right? Or walking on a balance beam. And this is us as investors. You can't get too down, you can't get too up in these markets, right? Speaking to somebody earlier, they just sold a ton of their Fubo shares literally on Friday. Like, geez, that's tough. And the thing I said is, if I told you how many stories I have of me selling a stock and then it went up substantially the day after, the week after, the month after, right? It's a long list. I've been in the market 16 years. There's plenty of times that I could look back over the past 16 years that I sold a stock and then it went up a ton more right after. I'm like, oh my gosh, like I missed out on another $10,000 of gains, $50,000 of gains, $100,000. That's the cost of doing business. It's the cost of doing business. It's part of the process. It's always going to be like that. You're going to sell some stock sometimes, and it's going to go up a lot right after you sell. And you're like, are you kidding me? Like, serious? That's part of the process. Don't get too down on those situations. It is what it is. It's a cost doing business. If you're smart enough to, make money in stocks, you're smart enough to find great opportunities, you're going to find plenty more fish in the sea. That's the thing. In the stock market, there's never it never just runs out of opportunities. There's opportunities I see in the market that I'm investing heavily into right now. I think are going to come to fruition over the next few years and going to print me money, right? There's opportunities last year, the year before, and the year before, and the year before, and there's going to be some next year, and the year after, and the year after. There's so many fish in the sea. You never run out. And so that's just something to keep in mind. You never run out. And you just learn, right? You learn. Sometimes you made an emotional decision to sell. Sometimes you made what was the right decision to sell, right? And, you still kind of get bit by things going the other way. On the flip side, you can't get too euphoric over these sorts of moves. It's all part of the process. If you're making good money out there in the market, that's what you should be doing. If you're putting in the work, you're researching these companies, right? You're looking at their valuations, you're using 1000xstocks.com, you're listening to conference calls on there, right? You're doing all this, you're running your projections, and you're making money. That's what you should be doing. So don't get too euphoric about it. You should be winning. Be happy, celebrate, but at the same time, don't get too over the moon about it, because that's what you should be doing. No different than if you're a great sports team and you win a game. If you put in that sort of work, you should win that game. And yeah, you can celebrate, you can be happy about it, but at the same time, don't get too bored in regards to the feeling around that, because that's what you should be doing. You should be winning. You deserve to win. You're putting in the work, you deserve to win. And so just expect it. Expect it. Expect to make thousands of dollars. Expect to make tens of thousands of dollars. Expect to make hundreds of thousands of dollars. Expect to make more from great investments than you make from, a job or from work or things like that, right? There's many stocks I could run through that I made way more. When I worked at Quick Trip as a manager, I was making 50-something thousand a year, 50-something thousand a year. And then you look at some of the gains I have in the public account, right? Didn't I show some of that earlier? Right here. Keep in mind, I made 50-something thousand a year as a manager at Quick Trip, working 48 plus hours a week on my feet, right? $858,000 gain on Meta, $391,000 gain on Tesla. And keep in mind, I've sold the far majority of my Tesla shares over the years, so it's like the amount of money I made from Tesla is just disgusting. Palantir, I even sold a ton of my Palantir shares, and I'm still sitting on $227,000 gains. And I made, once again, I made like $50,000 to $60,000 a year at Quick Trip as a manager. So just look at the numbers and just this is what you should be doing over time, right? And the fun part is, the more you build up your wealth, right, the more the numbers become pretty extreme. And so a spec stock, let's say for me nowadays, might be a $50,000 position or a $75,000 position as a speculative play, right? Which is pretty fun if it ends up becoming that 10x or 100x opportunity. But if you're smaller net worth, it might be much smaller, right? And a big position for me now is like multi six figures, right? And so when those ones 2x, it's a lot of fun, man, because then you're making multi six figures on profits in that, right? So it's just one big game of compounding, getting the snowball bigger and bigger, and just expecting to have success. You're putting in the work, you deserve it. Where people kind of run afoul sometimes is if they just get in the market and they throw some money in some stocks they didn't really put in the work, and then they make money on that, because that's more a little bit of luck, right? If you just kind of watch a video or something and threw some money in a stock, that's more luck. And that's when you have to look in the mirror and you have to say, I got to take this stuff more serious. I got to learn this on a high level, because Jeremy's not always going to be here to talk about what stocks he's buying, right? In those sorts of things. And so that's why you want to utilize the courses in my private stock group, so you can learn all this stuff, because I teach it all to you, right? I run through the videos, I do exclusive weekly videos, all that good stuff. So Anyways, pin comment down there. Take your game up to a much higher level than where you're at. So, you can get, let's call it making some more gains, and then being confident about it and feeling good when you do it. And not feeling like you played the lottery. Feeling like, yeah, I put in the work, I did the research, I ran the projections, I ran the numbers, I went through the risk reward, did the SWOT analysis, and I decided to put my money where my mouth is and made that investment, and then you feel good about it, right? All right, guys, appreciate you joining me as always. Much love. Thanks for being here. Thanks for being subscribed, and have a great day.